successful they are and we are as their partner in leveraging will be a very, very important part of a decision about whether to invest or not invest, or to stay invested. Our bilateral finance can do much more to leverage much more. And so the multilateral climate funds actually do a very good job at leverage, whether the CIF or the GCF, etc. And the MDBs are getting better, but have still got a very, very long way to go. And I think what was interesting is the recent report by Standard & Poor's, S&P, which came out of work led by the British government with the private sector at the City of London through the task force on, what is it, the task force on, the investor task force, there we are, on climate finance. I can't remember, it's only day 2 of COP. But the investor task force commissioned Standard & Poor's to do a report that looked at if we re-rated the MDBs based on their past performance and what they can do, and actually got granular about the rating of MDBs, their headroom is hundreds of billions more than we think it is right now. These kinds of numbers and these kinds of experiences should inform the COP so that it has confidence that that 300 billion that was agreed last year in Baku is a number that we can deliver on, notwithstanding the headlines that you read in the newspapers. But it also should inform the roadmap to 1.3 trillion, because we do actually know a lot about how to do this well, and we just have to focus and be disciplined. So defragment the financial landscape, defragment initiatives, concentrate on the initiatives that work, kill off zombie initiatives, which is one of my personal mission in life at the moment, and let's get going. So who we have with us today is a august panel of people from different parts of the financial ecosystem. We've got multilateral climate funds, we've got MDBs, we've got export credit, and we have a good old-fashioned bank with Standard Chartered, a global bank. So what I'm going to do is I'm going to ask Zoe to come back on stage and read out the statements from the 2 people who were hoping to join us virtually, which is just a bridge too far for the UK Pavilion today. And then what we'll do is we'll bring the panellists up. Zoe will moderate the panel, and then I'll come back and offer some concluding comments. So thank you very much, and let's get to the heart of the matter, which is the mobilisation of finance. Thank you very much.
Thank you. Yes, we're in a situation where unfortunately we don't have Wi-Fi connected yet by the technical suppliers, so we're not able to have people joining remotely, which is a huge disappointment. So we didn't want to leave their voices out of the discussion, so I will read their speaking points that they would have made if they were able to join. Tim Reed, who is the CEO of UK Export Finance, sends his apologies, he wasn't able to connect. What he wanted to say was that the export credit and trade finance industry is hugely influential globally, with up to 28 trillion, comprising 80 to 90% of international trade relying on trade financing, with export credit agencies and export-import banks providing around 2.6 trillion of payment risk protection. And scaling export finance to deliver on climate and development goals can help bridge the finance gaps that we're observing across the globe. The way that UK export finance works is simple, and other export credit agencies. They use the strength of public balance sheets to provide sovereign-backed guarantees, loans, or insurance that crowds in private finance. And also coordinate with other financial institutions to support greater flows of finance into emerging markets and developing economies. That's why last year, UKEF set a milestone to provide £10 billion of clean growth finance by 2029, and they've already made strong progress towards this milestone with 2.3 billion of support last year. UK Export Finance is a strong believer in the importance of close collaboration between export credit agencies, both on transactions as well as on policy. And so the agency is working with like-minded credit agencies to align on approaches to net zero, including methodologies for target setting. And this will really be key to level up the playing field and to scale up the mobilisation of climate finance. An important platform for UKEF to do so has been the Net Zero Export Credit Agencies Alliance. And this alliance brings together a high ambition group to deliver on net zero commitments by 2050 or sooner. The alliance is now going into its third year since the launch at COP28 and will be publishing its first progress report in the coming days to coincide with COP. While Tim is very disappointed not to be able to join at the event today, he believes that the subject matter could not be more important. New approaches to climate finance, which enhance collaboration between stakeholders, are critical if we're going to mobilise the trillions needed to meet our climate objectives. And UK export finance, alongside the wider ECA community and the other public and private financial institutions with which they work, will play a really important role in achieving that. So that concludes the remarks from Tim, for which we're very grateful. And I will now read also the comments, the remarks from Mayra Madrid, who is CEO of ABGF, which is a Brazilian export credit agency. So Mayra says she wants to highlight how much ABGF values its partnership with UK Export Finance during this important phase of the agency's re-emergence. So over the past year and a half, ABGF has undergone a deep restructuring to fully re-engage with Brazilian exporters. The agency has provided over $2.8 billion in guarantees during this period, signaling its strong return to the market. A key part of this journey has been aligning their strategy with the Ministry of Finance's Ecological Transformation Plan and establishing a dedicated sustainability team focused on integrating these objectives into ABGF's operations and studying how other export credit agencies are preparing for this transition. Now, with Brazil's green taxonomy officially published, ABGF is adapting its internal processes to classify and prioritize operations accordingly, embedding sustainability into product design, risk management, and capacity building. This represents a major step forward in integrating climate considerations across all of ABGF's activities. One recent example is the introduction of green mitigants into some of ABGF's guarantee instruments, particularly domestic guarantees for liquidity finance in strategic sectors. In these operations, beneficiaries are encouraged to direct capital towards sustainable aviation fuel production or offtake agreements. This not only aligns with ABGF's portfolio with climate objectives, but also creates incentives for the development of Brazil's green industry. Sustainability is also at the heart of ABGF's 2025 to 29 strategic plan, which sets clear goals to expand coverage for SMEs, women-led companies, and to promote the export of sustainable goods and services. SMEs are really a central priority. Our goal is to increase annual support tenfold to SMEs, targeting $4 billion in mobilised credit over the next 6 years, with a strong focus on climate-related businesses. To advance these initiatives, ABGF is working closely with the Inter-American Development Bank, which is providing both technical and financial assistance, including up to $300 million to help structure a new fund. Beyond financing, they're working together to build a model that targets SMEs in low-carbon and bioeconomy sectors and see great potential in supporting Amazon-based SMEs that promote the sustainable use of natural resources. Their strategy includes working closely with local banks and branches to reach these businesses and unlock their growth. The United Nations has recently recognized export credit agencies as key enablers of private capital mobilization for the Sustainable Development Goals. And this acknowledgement highlights the vital role that ECAs play in bridging public policy and private finance. By de-risking projects across Latin America and unlocking private capital through innovative risk-sharing mechanisms, ECAs make green investments more bankable, closing financing gaps and attracting long-term investors. Latin America holds extraordinary potential in biofuels, critical minerals, and renewable energy. However, realizing this potential requires investing in industrial capacity, value-added production, and technological innovation. By mitigating risk, ECAs can help unlock the capital flows needed to turn our climate ambition into action. So that concludes Myra's remarks, and Rachel, I'll hand back to you to run the panel with our other speakers.
So I'd like to invite up onto the panel, please, Anderson Caputo from the Inter-American Development Bank, bitte, Jakob Topil from SIF, best dressed guy in climate finance. He wins the award every year. He's the GQ of climate finance. And Germana Cruz. Don't worry, we'll think of awards for everybody by the end of the panel. So I'm going to come... So I want to ask a series of questions. So one of the things I think has been really remarkable since Paris has been the growth of national development banks. I think this is a phenomenon that is not fully understood nor exploited yet, but also the way that export credit has started to move as a mechanism into supporting green growth more reliably, I would say. So my first question really is to IDB, to Anderson. When you sit in your institution and you look at export credit, you look at other financial partners, what does it take to build an effective partnership to mobilise finance? Because when I look at IDB, I think IDB is one of the most innovative regional development banks. IDB Invest is like on a tear. You've got a fantastic relationship with BNDES as well. So what does it take to make a partnership that really works?
Can you hear me? Okay. Thank you very much. I don't think you can hear me. No? Hello. Hello. There is a sweet spot here that I'm trying to find. So I cannot move. Okay. No, thank you very much for the question. And we are really proud that a lot of the remarks that were made here resonate so well to us. No? I really like the point that you mentioned about reducing the fragmentation. We need to be seeing what is working and try to replicate more. No? And then I think that this is our mantra. No? Can I try? Okay. Getting instructions here. Okay, let's see if it works now. So to address the question, I really thankful for the remarks that we are trying to be as innovative as possible. And then a mantra that we have is that we really need to build these partnerships and reduce fragmentation of solutions. So the point of national development banks is critical for us, because we see that we need to search for that complementarity, that we as MDBs, we have the competitive advantages of getting funding in better ways, etc. But we don't have the capillarity, no? And also the local knowledge that the national development have. No? So let's keep trying. I see the partnership with export crediting agencies as very, very promising. You mentioned that there is still a lot to go, no? But seeing the points that Tim highlighted, no? The advantages that export crediting agencies bring, and then we as MDBs could partner. Now, especially, I see 5 key points. No? We can further help in the de-risking. We can further help in the originating and structuring, which is really the bread and butter of MDBs, together with the national development banks. The other part that is critical is to deepen, and that was great, the points that the BGF brought now to Maíra, about the policy dialogue and the capacity building that is needed to be taken, no? Even with the local agencies. And then we have the mobilization of private capital that we could be doing together in much greater scale, because you mentioned about the power, the lending power of MDBs and how it could increase ratings, etc. And we should be working on that. But much more than that, we needed to have this model that we are actually enablers of private capital mobilization, because even if we lend everything that we have in our balance sheets, it will not be enough. No? And I'll tell about innovative solutions that we are doing in that regard, and aiming at the 1.3, not only the 300. No? And finally, standards and transparency, that is critical. No? So in all these lines, what can we do? We can help with blended financing, guarantees. No? In the origination and structuring, we can deepen the knowledge that we have on the ground, but also bring technical assistance to make more bankable projects done. In the policy dialogue, we know that it's not only about the money and what we do. There are a lot of restrictions, regulatory restrictions, capacity restrictions that need to be put in place, and we have a major role in supporting countries in adopting these reforms, and the standards and transparency. You also mentioned that the money needs to go where it needs the most, but the money will only go if there is strong governance and standards behind, so that the investors, they know that this is well said. There is no washing, no? And then this is another critical part that we do, no? And what makes good partnerships, just to finish on that, I think that we have to have 5 elements in mind, no? One is these shared objectives and climate alignment, no? I think this is kind of easier to get, but we really need partners that are fully on that, on the private and public sector. Then we need to look at the complementarity roles that each have, no? The public sector, especially on the de-risking and etc., and then the private sector coming with the private capital and putting in there a bit of the credibility and the monitoring that the private sector needs. We need to build trust and transparency. That's the third part, which is, again, governance is critical here, high standards. And we need to stop those, I love the word also that you said, that you're killing initiative zombies. No? We need to be, from the start, looking to replicability. No? Because there is no time to be wasting and understanding fragmented initiatives. No? You need to find what it works and replicate that more and more. And then we need the innovation and flexibility, and I'll tell more about that in my second.
Thank you very much. Is it working? Not working. Working. Only sort of working. I feel like that in my body. Right? Now working? Excellent. So while it's still working, I want to make a plug for IDB because they're too shy. But this week they're really talking a lot and will be launching Reinvest, which is really a fantastic initiative which we're very proud to support. And read all about it on their webpage, but I think this is the kind of thing which really gets us to the kind of scale that we need to get to. So watch out for that. So now I'm going to come to Jakob from the Climate Investment Funds. And I think people know what the Climate Investment Funds are. It's one of the most successful sort of multilateral climate funds. I know the CIF because I was involved at the very, very, very beginning, which people think that was when the committee that started of the MDBs said, no. It was a restaurant in Copenhagen while the Copenhagen COP was, decaying all around us, and where we knew that there was not going to be an agreement about any global climate fund. And a few of us from different MDBs had a dinner with others, and we said, what on earth are we going to do if this collapses? But we've got to start going now. And so the CIFs were created as an original sunset institution to bridge to the point when we would have a Paris. Anyway, they've been an extraordinary success story all the way along, and sunset is not part of their future. We need them to continue to leverage. So Jakob, you're the head of partnerships. What does a successful partnership look like from your perspective? And maybe give us a couple of examples.
Sure. Thank you. And thanks for also taking away my plug on what the SIF is, which is usually a big part of my stick. I usually refer to ourselves as the best kept secret in climate finance. We don't have a replenishment cycle, so we're usually behind the scenes. We're a $13 billion fund. We're the largest pool of concessional finance that directly supports the MDBs, the major MDBs that the G7, G20 have backed. World Bank, IFC, EBRD, Inter-American Development Bank, Asian Development Bank, and African Development Bank. Just quickly, in terms of, to answer your question on partnerships, I think there's about 3 or 4 principles. The first is you have to be accessible. And honestly, within this current world of the alphabet soup of the climate architecture between GCF, GEF, AF, now we got FRLD, and then you got SIF, which, thanks to Rachel, only a few of us know about. It's really hard for developing countries to figure out, you know, not to mention their own capacity constraints. So that's a huge issue. And I think the competition's happening at the wrong level. It's the funds going after the donors for the very limited concessional ODA that's available when the competition should be happening at the implementer level. We should know who gives the concessional to who, and we should focus on that niche, in my humble opinion. The other is ownership. We have to put the countries in the driver's seat. I mean, this is not some new revelation. I mean, I've worked in aid for 30 years, and we've been talking about this for decades. Now it's country platforms. It used to be PRSPs and swaps, and tomorrow it'll be something else. But at the heart of that issue, it's about putting them in the driver's seat and helping them if they don't have the capacity. And the one great thing about the SIF is it's always relied on a programmatic, national-driven model that's demand-driven. If they don't want it and they don't own it, they don't have to come for it. We're not allocating our limited concessional money regionally or geographically. We do a call in the thematic area of interest. We try and raise some noise, like I'm doing awkwardly right now, and hopefully they come. And then I think it's about making sure the right players in the country are at the table. I mean, we're not a UNFCCC official mechanism, and I'm really honored to be here, and great thanks to the Brazilian government as well as the UK for hosting this. But I mean, we've got a whack and an army of climate negotiators in there who are knocking out an agreement. Where are the finance agents? As I said, our model's restricted to the MDBs. And so we get this benefit of working directly through planning ministries and finance ministries because they tend to be, unlike the UK, they tend to be the governorship to these banks. So they're our interface. And that really matters because then when one of those programs holds, it gets integrated into the fiscal framework without us really having to do too much. And I think that's a really critical point. The last one I just say is trust and confidence. You know, they have to believe that you've got the quantum and you've got the quality of finance that they're going to need. And the SIF has that. A lot of people don't know us, but our money can be cheaper than IDA. And people forget that. And so if, you know, within our flawed ODA system, the good and the bad is that we're reliant on these MDBs for scale in these countries. And to push them into taking the risks that are tough for them to take because of that, guarding that AAA credit rating agency, they need that concessional love. And, you know, we aspire to give that to them. I've done too much talking. I'll stop there.
No, that was really good. It was really clear and it's very powerful. Thank you very much. So now to the end, we've got Jemana Cruz, who I'm delighted to have with us here, who's the CEO of Standard Chartered in Latin America. So I think Standard, when I think about all of the big global banks, Standard Chartered is the one that sort of not only is a partner and also a sponsor to this pavilion, so thank you very much, but it is also often pushing at the edges of the frontiers of partnership.
Yes.
So what's your approach to partnering with public finance? What works, do you think, or what does it take?
Yes. Can you guys hear me? Yep. Yeah. Okay. So, as everybody already mentioned, Rachel, it's about partnership. You know, when we talk about sustainable financing, it's not only one part involved that will be able to move forward and do the job. So from our perspective, what we are trying to arrange with the MDBs and entities like UKF is how we can together come up with a standard approach in order to identify the projects and be able to finance them. Because nowadays what we notice is that each project has their own characteristics, and then for banks like Standard Chartered, we need standard procedures. So for us, it's very difficult to finance one project and not be able to replicate to another project, to another project, to another project. So is what we already mentioned about be able to scalability, because then the money will start to flow and then we will be able to replicate. We know it's a difficult task, especially nowadays, and more importantly, in the places like Brazil and Latin America, that the projects are more difficult to be implemented depending on where you are, the bioma, the ecosystem, how you approach them. So for now, we are really going on a case-by-case basis. It's not a simple task. One example I can share is about the partnership we are doing with the state of Acre here in Brazil on carbon credits. We started a conversation with them 2 years ago. We've been dialoguing for 2 years in order to make sure everybody, the communities, public sector, private sector is involved. We define and consolidate that information. Now we are moving into documentation, which is really tricky because we have the Brazilian environmental law, so there are some rules that we need to follow. There are rules that regulators impose on us and also MDBs to follow in order to finance. And we expect to have the transaction ready mid-next year. So in total, it's going to be 2 years and a half that we've been working on it. But what we expect that once that is done, it can start to be easier to replicate. And then we'll be able to move on and move on and move on, and hopefully go one level lower where we can get the small projects. And then we can congregate all the banks, locally, domestically, international, within the same framework, same taxonomy as everybody says. So we are speaking the same language in terms of sustainability. And then we are going to get the scale, because that's the main challenge we as a commercial bank and all the commercial banks are facing nowadays.
So thank you so much. So that's a perfect segue into sort of the second round of questions, right? So you've each got 3 to 4 minutes. What I'd really like you to focus on is a couple of the innovations that you're the proudest of, and you can talk about Reinvest here if you want, as well as EcoInvest, and what lends them to scale or replicability, because I think one of the things that's become really clear in the last 2 years in particular is that we've got an extraordinary amount of innovation going on in the finance space. But if you're a mainstream private financial entity of whatever kind, persuading the sort of guys with the green visors on that this is not a wild risk, but is actually a recognizable financial instrument that they should be able to make a decision on is one of the big problems, right? So I think there's more and more focus now on standardization in order to get to scale. But so I think all of you are innovating, but you're also innovating things which lend themselves to scalability. So I mean, maybe come back to you, Anderson. I've been so impressed by IDB and IDB Invest in the last couple of years. So just give us a couple of examples of what you're proudest of and why it will scale.
Okay, we are very, very proud of 3 initiatives And they are interrelated. We are not fragmenting. Like the first one, there's a lot of talk about EcoInvest. No? EcoInvest is an initiative that became law in Brazil. It's led by the Brazilians. Became law in May 2024. 2 years ago in COP28, we announced that we were going to do it. And it's really impressive, the achievement that's already achieved, getting. No? It has already, in this program, we have reached. I think this one is working better. We have reached commitments of $13.2 billion already of private capital mobilization with EcoInvest. No? It was like, and I was proud of being there when the government asked, we need mobilized capital for the ecological transformation plan in Brazil. Can you help us? We have problems that the money is not coming in because of FX volatility, of high cost of capital. No? And then we started working at a very fast pace in 4 different elements. You needed blended financing to reduce the cost. You needed 2 solutions of FX that we stepped in for. First, expand the availability of long-term derivatives. And then we use our AAA in the IDB. We signed an ISDA agreement with the central bank. And we have a conduit that we do the derivatives through the central bank. And this goes to the financial institutions that can go to the projects, right? Long-term derivatives. Third, we had FX liquidity facility, which is a contingent facility that many times you don't need to do the derivatives. Your project is fine in the long term, but where you can get killed is in the short-term fluctuation that you need liquidity. And then we have an FX liquidity that if there is a devaluation, you get a credit. And then fourth, you need to support early stage projects. And then EcoInvest in the third auction did a private equity related with FX hedging mechanisms. No? So there has been 2 auctions already with this 13.2 billion. One going for all with a governance mechanism behind of the ecological transformation plan. No? There was an auction of recovering degraded lands of the size of Lebanon, no? 1.4 million hectares that were done. There is a third one in process right now, a third auction that is taking shape, which is this one in equity, private equity. And we are going to be announcing in 2 days a 4th auction that's focused in the Amazon. No? So I have to thank the UK for all the contributions in these initiatives. No? And then I said that there are 3 initiatives, but actually the second one is called FX Edge, which is basically replicating EcoInvest in 2 other countries and adapting that. So it's naturally like it's the scale. It's not a separate initiative. And then we have Reinvest Plus. Reinvest Plus is the new kid in the block, which has a lot of potential. We got a lot of interest. We discussed in the Climate Week in New York. We announced in Seville. But the idea here of Reinvest Plus is that we found out there are a lot of projects that are already performing in the balance sheets of banks, right? And we are here trying to mobilize capital of the big pockets of pension funds, etc., that they cannot enter in the beginning in these investments. No? So what Reinvest Plus does is that let's get this portfolio of performing assets, get these banks to sell those assets, then we as MDBs and others, we can further de-risk that so that this is in ways that the investors with big pockets would invest, like reduce currency risk, reduce the credit risk, and then they can buy this, and that creates a space in the balance sheet of the banks that can then reinvest in new projects and originate. And then you create this flow, right? Right now, we are receiving proposals of partners to come and work with us, design this in the next 12 months so that we can develop that. So, and we are going to be having also on the 14th a session dedicated on Reinvest Plus at 9:30 in the morning, and then we are going to cover that in greater detail.
That's great. Very, very good job. That's a great job of explaining the approach that you're taking. So now to the CIF. So we did something very sexy together, the UK and CIF, just at the beginning of this year. Well, I mean, you did it and we just gave you a platform, but talk a little bit about that and maybe anything else you want to talk about.
Sure, no, absolutely. Happy to. In fact, there's three things that I'd like to highlight as a demonstration of how the UK constantly pushes the CIF to be even more innovative than I think the platform is. What Rachel's referring to is at the beginning of this year, and this isn't just about CIF or climate, in my humble opinion, this is about an ODA evolution in having a trust fund, the first ODA-based trust fund to actually access capital markets dedicated to energy systems and clean tech. I think in a world where the global ODA pool is shrinking by, I think in the last 2 years it shrunk almost a third. I think that's really important, and the UK saw this and recognized the quality of our balance sheet and recognized that we could get it assessed and rated, which we did by Moody's and Fitch, and it's AA1, AA+, respectively. And thanks to Prime Minister Starmer, who allowed it to be listed on the London Stock Exchange, we issued our inaugural bond issued at the beginning in January, raised $500 million. Now, the value of that in issuing debt is that this is without any additional pressure on the taxpayer. Our preliminary estimates are showing that we'll be able to raise about 800 to 900 million a year in a portfolio that's leveraging 1 to 12. That's if my math is right, that's about a $20 billion additionality to the investment pool, without any more burden or me needing to chase ambulances to raise more money. I think that's a huge win. The second one of the three I really want to highlight is the fact that the UK has really pushed us into trying to supersede that leverage ratio we have of 1 to 12 with a new innovative financing instrument that we're in the midst of finalizing to pursue high leverage and to direct those finances towards priority clean tech areas. More to come on that. But that's, it's been a lot of hard work, but thanks to the system of MDBs that we get to work with, that's possible. And then the third and final one I'd mentioned that the UK has been really active on with us has been announcing the first global program dedicated to tackling high-emitting, hard-to-abate industries that are the culprit of much of the emissions on the planet that we're not going after in a dedicated way. And this program aims to do that. It is the first program in which we'll have a minimum of 50% of the projects to be financed dedicated to the private sector. And we just announced over $1.5 billion in concessional money. Again, that's in a 1 to 12 leverage ratio. So you can do the math on that because I can't. That is going towards the first 7 countries that were identified, and there will be more to come, were Brazil, Mexico, Egypt, Namibia, South Africa, Uzbekistan, and Turkey. Whoa, can't believe I got them all. And finally, the point I'd like to raise within a context of private capital mobilization and leverage is this is absolutely important because of that shrinking aid envelope. But I think we all, as custodians of that envelope, need to be mindful of the fact that who's going to benefit from that high leverage pursuit. It tends to be the same middle income, upper middle income economies that are grabbing that very constrained aid envelope. And, we need to be mindful of those who could be left behind. And, we're trying to import some of those lessons learned from the Clean Technology Fund and the great work that the UK is pushing us on and holding our feet to the fire on for adaptation and resilience finance. And we're trying to import those lessons to how do we draw private sector, private capital into the marginalized, into the most vulnerable economies that are getting double F'd, forgive my language, but the aid pool is shrinking and they're not investable. They're certainly not going to benefit from high leverage facilities or such work. So, you know, I think we need to be putting our heads together and worrying about them as much, if not more so. So just a parting thought. Thanks.
No, so I think this is a very important point that you make, because I know while you're working on a mechanism within the SIF to be able to do that, in the negotiations, adaptation finance is going to be a big part of certainly next week. And I think that, you know, there are important things to negotiate, and there are important responsibilities for countries like ours. But this is just a tiny, tiny drop in an ocean of finance that is needed. And I think our German friends are looking at they've been talking about a sort of adaptation boost. How do we, between the COPs, maintain a really structured dialogue between public finance, private finance and other actors to really try and break through the barriers of adaptation finance, because what investing in resilience means in the real economy, and then what we discuss in the negotiating halls are sort of in different universes. So that I think this is really important. So now just a Standard Charter to conclude. When you see all these new innovative stuffs and all these acronyms coming in over the wall from the acronyms.
From the acronyms.
Well, what do you really need to see, or where would you like to meet public finance so that we can really scale? You started to talk about that before, but maybe go a bit further.
Sure. And this is what we've been trying to get. It's about the standardization, it's about to be not working. Let me get yours. Better? Yes, thank you. No, what I was saying is exactly what we are looking for. As a bank, and any other bank, we need to predict things. We don't like volatility, especially in long-term financing. So the more we can standardize, the more we can get partners that can provide this comfort, the better, and the more money we will be able to deploy. I believe we have this 1.3 trillion needed. I think the problem today is how to connect the dots, and then having this protection that the commercial banks need to lend, not only for the project itself, but also for the economies, especially for Standard Chartered in Latin America. All the exposure we have in the region and all the volatility that the region has been facing, and the need that the region has in this segment is extremely important. But then the question is, how do we feel comfortable in deploying the money? That is not our money at the end of the day. That's what we try to emphasize. The bank doesn't own the money. Somebody else owns the money. So my responsibility is to make sure the money is there when the owner needs the money with the right remuneration. Even though we have a lot of clients open to put the money for sustainability, they also want to make sure when they need the money, they'll get it. So with the UKF and MDBs and all the other partners, we are trying to make a standard. It doesn't need to be 100%. Using EcoInvest as an example, Standard Chartered's sustainability framework matches 87% EcoInvest's framework. So it's good enough for us to deploy money within the projects, and we are already doing that with the local banks in Brazil. We are lending to them, and they are all lending to the projects because it matches. I don't need to know exactly what is the final project that is being financed because I'm navigating in a standard framework that everybody knows what is going to happen. And for the local banks, the fact that they have a hedging instrument for a 25-year project or 30-year project with the FX volatility is marvelous. In addition to that, they have a portion of the money subsidized by the Brazilian government with the agreement that they need to bring 6 times more money from abroad. This is where Standard Chartered comes in, and other banks are coming in. So we found a way, and we've been seeing a lot of money being deployed. So how can we replicate that? And how can we really get the small projects, because I think this is where we are going to make the difference. For now, it's easy, even for the local banks, to go to the large projects, because we are talking about cost benefit. You have to have a dedicated area, you have to have somebody to monitor, you have to have somebody to prepare the regulatory reportings, because as a bank, we need to be disclosing how much of the capital, depending on the risk, is being allocated for the project. If something goes wrong, I guarantee to my clients that I have enough money to bear the problem with the projects without interfering in their own money that it is with the bank. So overall, we found solutions. We just need to keep going, keep the dialogue, trying to see how we can replicate for big projects, small projects. One size does not fit all. A big company doing a project is different than a small company doing another project. We are talking about different ecosystems. So I cannot replicate projects that I do in the northeast of Brazil, in the center of Brazil, in the side of Brazil. Is a different ecosystem, is a different bioma. So we need also to adapt. And one thing that I would like to mention, and we'll be discussing with the UKF, is that data. So how can we monitor what has been happening in that ecosystem that may predict how the project will be impacted if there are less rain, more dries, fire, etc. So then, again, it comes back to the square of the banks on monitoring risk. So how much risk am I accepting in that project by knowing what happened in the past and predict what could happen in the future? And this is where we are really concerned, because you have several AI tools that could help you that, but how to validate the data? How to make sure that the information AI is bringing to you is true, is valid, and I can use that for sure to run my models and to predict the risks in the future. So a lot of small pieces and, happening at the same time, but I think we are going in the right direction, and we are seeing things happening. So we are happy that we are progressing together with all partners involved.
You wanted this? Very good. This one works. Excellent. So the leverage rate on microphones of this session has been 1 to 5. So the only way to go is up. So please join me in thanking our 3 amazing panelists. We're kind of out of time. I just want to sort of make 3 points in conclusion. When we look at the history of finance, look at the history of banking going back to the Middle Ages or even beyond, it started on the basis of trust and confidence. I trust you, you trust me, we can trade, we can transfer funds. And I think it's always interesting, for obvious political reasons, why finance is not trusted in climate negotiations. But what I've seen over the last few years in particular is an absolute explosion of innovation, of really extraordinary sort of breakthroughs. And the question is just how to make those more available to more people, and to keep extending that out into the universe of the people who need access to finance, who need access to the investment for their own resilience, but for their own green growth and prosperity. So despite the fact that this is perhaps the most toxic element of any climate negotiation, on the flip side, there is an ecosystem of trust and confidence being rebuilt or being made stronger. And all of your institutions are fundamental to that. So we have to keep hold of these 2 truths at the same time. The second part of this is somebody somewhere has to take risk. Somebody somewhere has to take an appropriate amount of risk. And the reality is that it is for governments to have a framework with the private investors. And many of that are our pensions and other long-term investors, insurance companies. But who takes that risk and why they're taking it is little understood, I think, actually in the world of negotiators or in the world of the general public. It is in our interest to make an appropriate amount of risk or take an appropriate amount of risk to the protection of fundamental ecosystems, which if they collapse, we will have to pay for from the public purse, just as we'll have to pay for it another way. So where do we get the political consensus that these smart risks are worth doing and worth doing now? So these are all things that are going to come up in the negotiations over the next 10 days. And then the third thing is how to tell the story compellingly. You heard examples here today, but this is fundamentally exciting stuff. If you can take £1 of taxpayers' money, and the taxpayers are happy to be in solidarity with people around the world. The idea that the British public is not proud to be of service is absurd and not backed up by any political poll that I've seen, and not backed up by any conversation I have on any doorstep in any part of the country. They want that money spent well, but they want to be in solidarity. Now, the idea is that if through financial engineering and innovation and appropriate risk-taking, we can take that pound and turn it into 20, well, why would you not like that? And so I think we have to be a little bit bolder in this trust and confidence that we're building in terms of explaining this to the public in the north, so that the public in the south get to see the proceeds of the risk that they're bearing on behalf of all of us in keeping ecosystems intact and waiting for their chance at prosperity. So thank you very much. Go forth, multiply, and let's keep the good work going. Thank you.